Assalamualaikum and good day, doctor. My name is Nazira Minta Ibrahim and my metric number is 280848. And now I will talk about introduction of our assignment, which is performance portfolio evaluation. And for our assignment, we must create a portfolio worth of total of 500,000. And we have student 11 equity stock from different sector. And we need to form an equity portfolio which reference to the portfolio theory of 5 stock from different industry in the first week. We then collect all the stock data, and after that we will have our first rebalance for the 5 stock, and based on the rebalance result we will do a decision whether to hold or remove the stock. Then we will start to collect again the portfolio stock data and do the second rebalancing and our investment portfolio again, and this time we will add one international stock and we will stop the trading and finalize the portfolio performance based on our portfolio. After that, we will need to evaluate the overall of the result and compute the profit or loss that the portfolio generates at the end. Next, I will talk about economic analysis, which is Malaysia GDP. And as we can see at figure 1, which is that's a trend of the GDP in Malaysia from 2010 until 2023. Malaysia has had one of the world's most open economies since 2010, but the COVID-19 or coronavirus outbreaks result in big economic Malaysia in 2019, and the GDP for 2020 is 337 billion. However, the economic recovery in 2021, which expanding to 35 billions, and according to the World Bank data for 2022, Malaysia current GDP is 406 billion USD. Malaysia GDP consists of 0.80% of the global economy, and several factors have driven Malaysia objective and performance in recent years, including government support infrastructure development, uh, which has facilitated the economic growth and tight manufacturing sector. The second economic analysis is global GDP, and the figure 2 indicates a trend for global real gross domestic product growth post-coronavirus from 2019 with a projection up to 2024. The coronavirus pandemic has had a huge impact on the economy worldwide, and accordingly, the global gross domestic product shrunk by 3.4% in 2020, while the initial forecast was that it would instead increase by 2.9%, and the global GDP surged to include 5.8% in the following year, which is 2021, thanks to effort of the world governments for a rapid economic turnaround. The gross domestic product increased globally by over 3% in the following year, which is 2022, yet it has been seen how long Russia war in Ukraine would continue to have an impact on the economy at large. And on the back of this, it is expected that global GDP growth will slow down dramatically in 2023. The third economic analysis is inflation rate, and based on the figure 3 shows that the Malaysia inflation increased by 1.5% in February 2024, and which index points record at 132 against 129 a year earlier according to the Department of Statistics Malaysia. Malaysia annual inflation rate unexpectedly remained flat at 1.8% in March 2024, matching the rate for the second month, while below the market consensus of 2%. The latest result stayed at its highest reading since October 2023. Inflation came in 1.8% in February, up from January 1.5%. February result marked the highest inflation rate since October 2023 and was partly due to the timing of Lunar New Year in 2024. And looking at the details of the release, transportation price increased at a quicker pace in February compared to the previous months as the price pressure from housing and utilities. Finally, the consumer prices increased seasonally adjusted to 0.53% from previous month in February, accepting from January of 0.50% increase. And February result marked the highest reading since June 2022. Lastly is unemployment rate. Based on Bernama Malaysia jobless rate is to 3.5% in May 2020 from 3.6% in January. OSM explained that the number of labor force in first quarter of 2024 continued to upward trend by increasing 0.3% to 60.96 million person compared with fourth quarter of 2023. The labor force participant rate rose to 0.1 percent point from 70.1% to 70.2% in the fourth quarter of 2023. It edged up by 0.3%, which the number of employment person who registered 16.40 million person in first quarter against the 16.35 million person in fourth quarter of 2023. Unemployment rate from 2023 until 2024 decreased from 3.6% to 3.3%. This is a strong sign for the economy, since it signals an improvement in the job market and boost in economic activity.
Assalamualaikum warahmatullahi wabarakatuh, Doctor. My name is Nordiana Balkis binti Syarif and my matric number is 280503. So I will continue our presentation with the industry analysis. The financial service sector is crucial for any economy, offering essential services like banking, insurance, and investment, ensuring long-term growth and stability. Technological innovations such as mobile banking apps, robo-advisor, and blockchain are transforming the industry, making services more efficient and accessible, which enhance operational effectiveness and customer value. Strict regulation protect consumer and maintain market stability, while globalization allow companies to enter new markets and collaborate globally, leading to growth and economy of scale. This factor make the financial service sector a stable and dynamic investment opportunity with promising prospect for long-term growth and profitability. The industrial product and services sector is vital for global economic infrastructure, encompassing manufacturing, distribution, and construction, and driving continuous economic growth through stable demand fueled by investment in infrastructure and urbanization. Success in this sector relies on technological innovation and operational efficiency, which companies investing in research and development to improve product and processes while optimizing operations and adopting sustainable practice. Globalization further enhanced growth by allowing companies to expand into new markets from strategic partnership and reduce local economic risks, making this sector an attractive investment for long-term return and portfolio diversification. Healthcare sector is experiencing growing demand due to the demographic trends like an aging population and rising chronic disease. This sector benefits from technological innovations such as advanced medical technology, digital healthcare solution, telemedicine, and personalized medicine, which enhance diagnostics, treatments, outcome, and efficiency. Additionally, healthcare is economically stable as it remains essential regardless of economic conditions and benefit from increasing global healthcare spending by governments, private insurance, and personal investment, leading to consistent return and long-term growth prospect. The technology industry is defined by its constant innovation and transformative impact on daily life, offering substantial growth potential for investors. Companies in this sector lead through new product, service, and business model, driving high return through their ability to adapt to and create market disruption, which a broad spectrum of revenue stream, including cloud computing, artificial intelligence, and IoT solution. Technology firms like those mentioned navigate diverse market and capitalize on global digital trends. Investing in technology stock diversified portfolio and position investor to benefit from ongoing digital transformation, requiring careful consideration of valuation, regulatory landscape, and technological advancement to optimize return and manage risk efficiency. The consumer cyclical sector is closely tied to economic cycles and consumer spending habits. During economic expansion, when unemployment is low and income is rise, consumers tend to increase spending on discretionary items like automobile and leisure activities. This results in revenue growth for companies in sectors such as retail and entertainment. However, consumer cyclical are vulnerable to economic downturns and fluctuation in consumer confidence. During recession or times of uncertainty, consumer cut back on discretionary spending, impacting economic earning and potential causing stock price volatility. Diversifying investment across different industries within consumer cyclical can help mitigate risks associated with specific economic conditions and consumer trends, providing opportunities to capitalize on very market dynamic and growth prospect. For the consumer, non-cyclical or stateless offer stability in investment portfolio due to their focus on essential products like food, beverage, and household items. These goods are necessities that consumers buy consistently regardless of economic conditions, making companies in this sector rely silent to downturns. Stateless are considered defensive investment because they provide steady cash flow and often pay reliable dividends, appealing to investors seeking income and stability over time. Including consumer staples in a portfolio enhance diversification by reducing overall risk exposure, particularly when paired with more volatile sector. Their strong brand presence and customer loyalty further boost their competitive advantage, ensuring they can maintain market position and profitability even during economic uncertainty. This sector ability to capitalize on demographic trends and expanding consumer markets globally makes it attractive option for long-term investors looking to balance growth and stability in their portfolio. So the last one is the energy sector, which is the oil and gas services is essential for powering global economy through supplying energy for transportation, industry, and heating. This sector offers investor diversification benefit because it operates independently from technology and consumer staples sector. However, investment in energy are vulnerable to fluctuation in oil price, geopolitical tensions, and regulatory shift, which can significantly impact financial return. Despite these risks, the demand for energy service remains robust, driven by ongoing global energy needs, ensuring continued opportunity for growth and income potential through the dividends in the sector. Investors should carefully weigh this factor when considering the energy investment as part of a diversified portfolio strategy.
Good day, everyone. My name is Krishnaraj Raja, and my metric number is 287913. I'll discuss the fundamental analysis of the stocks chosen by my group. First, MESE Berhad has been shown the significant operational efficiency improvement despite a decline in revenue. The growth EBIT's margin have increased from 5% to 12%, with 51% of insider ownership involving the both male and female managers and CEOs. Strategic decisions focus on long-term value creation, making MESB Berhad to become a desirable investment. Next, KPJ Healthcare, a prominent Malaysian healthcare provider, has seen a 103.16% of increase in the stock price over the past 5 years. Despite the government's pandemic efforts, the company continues to thrive. While it lacks liquidity, KPJ Healthcare remains an excellent addition to any investment portfolio due to its strong growth prospects and ability to deliver a shareholder value. Lastly, Lafar Malaysian Cement Berhad, or MCEM, MCMAN, is a promising investment in the Malaysian construction sector with a market value of 6.82 billion of Malaysian ringgit. The company has this experienced significant growth, with sales increasing by 10.87% and profits by 60%. Next, Papa Jack Berhad is a popular investment due to its impressive financial performance, including a 20.61% of revenue growth and 28.94% of net income increases. With a net profit margin of 17.46% and EBITDA growth of 36.72%, its stock has a positive trend and offers a good liquidation and a 0.82% of dividend yield. Besides that, the Dutch a stable dairy company with a strong market presence in Malaysia, Vietnam, Singapore, Hong Kong, Brunei, and Philippines, has a low vulnerability in the Asia Pacific region, with a current stock price of 34.4012 Malaysian ringgit and a market capitalization of 2.2 billion of Malaysian ringgit. Plus, Apple Incorporation, a global tech giant, has seen a significant financial growth, achieving a market capitalization of 3.47 trillion of dollar and a revenue of 362.77 billion of dollar in the past year. The company's net income increased by 212.92% to 26.66 billion of dollar, demonstrating that the exceptional profitability and efficiency. Investors may be invested in Apple Incorporation, offering a potential growth and a respected income stream. Other than that, Pantech, a renowned steel pipe and fitting manufacturer, focused on oil and gas, water treatment, and infrastructure development, with a stock price of Malaysian ringgit of 1.0812 and a market size of 920.56 Malaysian of ringgit and a dividend yield of 5.56%. Pantech has demonstrated the significant performance with a 16.63% of revenue growth in February 2024, a 23% of net income growth, and 12.6% of net profit margin. Additionally, ShopRite Holdings Berhad is a South African retail chain with strong customer ties and a recognized brand. It offers growth opportunities in Africa's demographic dividend, a growing population, and a middle class. However, challenges including the rising cost and a 30% of effective tax rate, which could impact the profit generation and reinvestment in the capacity. Investors should consider the company's strength and potential risk before investing. LGMS Berhad, a profitable company with a 14% of operating profit to sales ratio, has seen steady income growth, particularly in the IT sector. The company's revenue growth rate of 22 per annum demonstrates its business management and increased consumption activity. With a pragmatic organizational structure and a net margin of 31%, LGMS Berhad's strategic objectives may provide significant future growth. Dayang Enterprise Holdings Berhad, a Bursa Malaysia listed company, is a potential leverage portfolio candidate due to its excellent growth signals. The volatile oil and gas industry provides traders with opportunities to hold on and move positions, potentially increasing the income. The liquidity and volume of Bursa Malaysia stocks make it a suitable investment target for the short-term price fluctuations. However, the leverage trading involves higher risk, and investors should consider about the inherent risk and expected profit yield when considering about the Dayang Enterprise Holding Berhad or other financial instruments. Last but not least, gold futures in derivatives involve the contracts allowing the investors to invest or sell gold at a set price in the future. Bursa Malaysia Derivative Berhad which is BMD, offers gold futures trading, allowing the investors to make assumptions on gold prices without the physical holding. Those contracts ensure the standard quality, quantity, and delivery, allowing the investors to hedge against the short-term volatility.
A very good day to doctor and everyone. I'm Pritika Perera Balakrishnan and my metric number is 282890. I will start with the result of analysis. Firstly, let's see how we collected the database for our group's portfolio. Our initial portfolio included 5 Malaysian stocks which are Pentec Group Holdings Berhad, Dutch Lady Milk Industries Berhad, Papa Jack Berhad, KPJ Healthcare Berhad, and Malayan Cement Berhad. We've also collected data for KLCI index as well for the whole assessment period. We started to download the historical data for these stocks prices and index value from investing.com covering the period from January 3rd, 2023 to establish a solid foundation for our analysis and initial investment strategy. For our first rebalancing, we used historical prices which were also derived from investing.com from January 2nd, 2024 to May 3rd, 2024. We stopped deriving data for two companies which are Dutch Lady and KPJ Healthcare, where we included an international stock called ShopRite Holdings Limited ADR, which was obtained in US dollar. As for the second rebalancing, where the period starts from May 6, 2024 to May 31st, 2024, we only decided to continue taking stock price of MESB Berhad from the first rebalancing as 4 of the stocks did not perform too well. Therefore, we integrated new stock prices of LGMS Berhad, Dayang Enterprise Holdings and another international stock which is Apple Inc. as a substitute for ShopRite Holdings. Apple Inc.'s stock prices were also derived in US dollar. In addition, we have also included gold futures as a derivative to hedge against market volatility. However, we utilized the Bursa Malaysia platform to get the futures price. Our final rebalancing occurred between June 4th, 2024 and June 24th, 2024, during which we retained all the stocks to evaluate their performance under stable condition. On top of that, the risk-free rate were used to find the CAPM is Malaysian Treasury Bills rate up to 3 months, which is at 3.2%, which was derived from Bank Negara Malaysia's official site. As I mentioned earlier, we have included 2 international stocks in our portfolio. Therefore, we have also collected the exchange rate of USD per MYR from investing.com as well. As for the return, we use this formula on my right to get the accurate return of the stocks and derivatives to evaluate our initial performance towards the final. To avoid getting errors in the Excel, we added the if error key. In this context, they illustrate how each stock's movement relates to the KLCI. A positive correlation indicates that the stock tend to move in the same direction as the KLCI, while a negative correlation suggests an inverse relationship. Here are the correlation coefficients between the KLCI and the stocks in our initial portfolio. As for the Pentec, it shows 0.1987 indicating the strongest positive correlation. Dutch Lady 0.0913 indicating a weaker positive correlation. However, Papa Jack is 0.0607, also indicating a positive correlation. KPG Healthcare shows a 0.1742, where it shows a slightly stronger positive correlation compared to Papa Jack, but lower than Pentec. Malayan Cement at 0.0901, indicating a positive relationship as well. These correlations show that the stocks generally tend to follow the KLCI trends. Moving on to the performance of these stocks, I will start with the Pentec, where it has a beta score of 0.6584, indicating that it is somewhat insensitive to market volatility. Dutch Lady has a beta value of 0.1694, showing a light positive association with the market volatility. As for Papa Jack, has a beta of 0.2691, but KPJ has a beta of 0.6179, indicating a strong and high sensitivity to market volatility. Malayan Cement Berhad has a beta of 0.4414, showing a less volatility than the market as a whole. According to CAPM, Dutch Lady has the highest return expectation at 0.0243 according to its level of risk, whereas Pentec has the lowest at 0.002. We may assess each portfolio stock's risk-reward profile by calculating its CAPM and beta. A higher expected return and a higher beta indicate a bigger potential for gains, but also a greater volatility. Therefore, we expect that high level of CAPM for Dutch Lady would give a high level of volatility to our portfolio. Therefore, in order to step forward to the first rebalance, we decided to sell the Dutch Lady stock due to its negative return and our assumption of its risk would be high in our portfolio. Moreover, KPJ Healthcare's high sensitivity towards the market volatility also made us to sell the stock. That's all from me. Thank you.
So for first rebalancing that which we done by 4th May 2024. As the correlation part, you can see here the correlation coefficient between the KLCI and the Pantech is 0.2802, showing a positive but weak association, similar to the correlation between the KLCI and Papajack, which is 0.0887, which indicates a fairly strong connection. The correlation coefficient for Malayan Semen Berhad also showing a high positive association, which is 0.2427. And lastly, while MSB and Shorite Holding had correlation of 0.0851 and 0.1111, indicating a weaker positive link. So as we analyze these two equities, we believe that they can help to sustain our portfolio and potentially reduce risk. So moving on to the next part, which is the performance for the first rebalancing. So according to the table, Pantech has a CAPM of 0.0790, which represents a risk-adjusted return expectation, and also a beta value of 0.7986, indicating a considerable vulnerability to market swings. While Papajet has a positive CAPM and also a positive beta, which indicates a higher projected return and stronger positive relation with market movements. While say Malayan Siam Berhad CAPM is 0.0786 with a beta of 0.7909, while MASB CAPM is 0.008 with a beta of negative. Uh, this indicates that company sensitivity to market volatility, but MASB shows negative beta, which means to inverse relationship with the market. Uh, for the last part is the Sharpe ratio part, which is Solver has obviously decided to offset Papajet, MASB and SRGHY from the portfolio because they are negative annual return. It also shows that the weight of Pantech and Siemens Berhad have increased to 0.167 and 0.2324 respectively. Also, the standard deviation also increased as well, uh, and then the portfolio also grew. This suggests that an improvement in terms of projected return and risk. Also, the Sharpe ratio also increased from 1.215 to 2.106, allowing the portfolio to generate a higher profit than the initial portfolio. Moving on to the second rebalancing, which we done by on 1st June 2024. Despite the overall portfolio return and risk have gone up, even the first rebalancing, we still hope obtain more favorable outcomes in terms of our goal. Hence, we adding by one more portfolio like LGMS, Dayang Enterprise Holdings, and Opel, and also Gold Futures. As you can see based on the table, we can find all the stock in our portfolio have a positive relationship with the KLCI, XI, and MASB. The highest correlation between them is Dayang, and also it indicates that such strong correlation also indicates a good performance from international stock. Moving on to the performance part, according to the table, above LGMS and Dayang has a negative CAPM, which represents a low return than the interest rates, and a beta value showing a positive, indicating considerable vulnerability to market swings. On the other hand, MASB, Apple, and Future Gold has a positive CAPM, and also MASB have a negative beta, which indicates inverse relationship to the market and less volatile. Moving on to the Sharpe ratio part, which is you can see based on the table, the portfolio has recorded all the stocks with positive expected return. Uh, it also shows that the weighted of MASB have been reduced to 0.0623. In addition, the solver has determined the weighted of Apple at 0.58, which is greater than the equities. Uh, Lastly, the Sharpe ratio also increased, has improved, which is due to the portfolio return being higher than risk-free rate of 3.2, which increased from 2.130 to 2.903. Lastly is the finalization of trading, which we done on 24th June 2024. As we can see here, the beta of the Dayang MASB is 10.091 and 6.2 to O respectively, where it indicates that both stocks are more volatile than the overall market because the beta is more than 1.0. As we know, if the beta is 1.0, then it's more volatile than the others. The beta of future gold has relatively low beta, which is close to 1 but not more than 1. There's also stock that shows negative beta like NGMS and Apple. Uh, In addition, the APM value of the expected rate of return of each equity has been calculated. And as can be seen, the SPM value of the expected return of DIA, MSB, and future gold are negative, respectively. This might due to the higher beta value or higher risk of the equities and negative value of the market risk premium. On the other hand, stocks like LGMS, Apple has obtained positive value of CPM, which is 0.1040 and 0.0562 respectively. Although the market risk is premium, is the negative. The CPM and LGMS and also Apple is positive because the lower risk of beta or beta value of LGMS and Apple. So that's all for me. Thank you.
Assalamualaikum and good day, Doctor. My name is Nur Farahi, metric number 289950. Now, I will compare the CAPM and actual returns for our portfolio from 2nd January 2024 until 24th of June 2024. For Pentax Group Holding Berhad, the actual return was 21.35%, significantly higher than expected. Next, Papa Jack Berhad had an actual return of negative 5.66%, which was below the CAPM prediction. Malayan Cement Berhad actual return was 24.58%, outperforming the expected return. Next, LGMS Berhad achieved an actual return of 12.80%, much higher than the CAPM, which is negative 0.0025. Dayang Enterprise Holding Berhad had a positive return of 2.72%, although the CAPM negative prediction. Apple Inc.'s actual return was 5.01%, exceeding the expected return. In conclusion, many actual returns differ significantly from CAPM prediction, showing the model's limitation in predicting short-term performance. The figure compares our portfolio returns with the Kuala Lumpur Composite Index, which is KLCI, from January 2023 to June 2024 to determine optimal stock weightage. Our portfolio generally outperformed the KLCI with a few exceptions. In January 2023, our portfolio had a return of 28.78%, significantly higher than the KLCI, which is 0.78%. Similarly, in July 2023, the portfolio return is 47.62%, far surprisingly the KLCI, which is 4.55%. In May 2024, the portfolio achieved 36.86% compared to the KLCI, which is 1.04%. However, we did underperform in some months. In February 2023, the portfolio had a return of negative 25.68% versus the KLCI, which is negative 2.39%. In March 2024, our return was negative 5.99% against the KLCI, which is negative 0.13%. Overall, our portfolio demonstrates higher return in most months, especially during periods of positive month performance. This assignment involved analyzing 11 different securities across various asset groups. We started our investment in MESB Berhad and ShopRite Holding Ltd on 2nd January 2024. Later, on 6 May 2024, we included Apple Inc., LGMS Berhad, Dayang Enterprise Holding and Gold Futures. We began with an initial capital of 500,000, which we fully invested in 5 local equities. Our initial strategy was passive, holding these stocks until 3rd May without attempting to beat the market. On our first rebalancing, we achieved a return of 530,116.15 cents, We use this return as the capital for our second rebalancing phase, investing in LGMS Berhad, Daya Enterprise Holding, MESB Berhad, Apple Inc. and Gold Futures from 4th May 2024 until 31st of May 2024. In the second rebalancing phase, our return increased to 555,106.72 cents. This amount was then reinvested for our final rebalancing. After the final rebalancing, our portfolio reached a total return of RM555,055.15 by 24th of June. Additional international stock to our portfolio improved the expected return and reduced risk as indicated by a better Sharpe ratio. Additionally, using solver optimization helped us maximize our return by finding the optimum weightage allocation across all stocks. In conclusion, our portfolio performed well, generating profits that exceed our initial investment. By diversifying our asset classes and actively manage our investment, we successfully enhance our portfolio's performance and reduce the risk. Thank you for your attention, Doctor.